Super Bowl Sunday. The Eagles are beating the Patriots at the half, but I've learned not to count out the Patriots. And the only reason I've learned that is because I'm a Steeler fan, and so I get a few minutes to record this during the halftime of the Super Bowl, but we'll see what happens. Hope everybody's having a great week. Welcome everybody to the Daily Market Commentary. Those of you from tradersarmy.com, welcome to the weekend edition of our Core Market Perspective. Glad everybody was able to make it in today after a, let's use the word tumultuous. Can we use that word? Tumultuous? It was a tumultuous week in the markets, and we're going to do what we do each and every day. We're going to take a look at the same 10 to 12 futures markets, give ourselves some ideas and opinions and thoughts on where we think these markets may go, and the most important thing is we never get rid of our lines. We leave our lines on the charts, holds us accountable, and there is no way that that we could not cover a lot of different positions after the move that we had last week. So I didn't get a video out Friday morning. I wanted to get one out before the market started running, but was not getting one out, and so I figured I would just cover everything on the weekend edition and kind of highlight what we talked about. I did post a couple of things through Twitter, and a number of you were able to catch some of the updates that we had in Twitter, so let's go ahead and get rolling on some of that material. So first of all, from our levels from Thursday, we actually had a nice little move on Thursday off of this little long position from Thursday. So those of you that caught that little long position moved for a nice about 4 to 1. So that was a pretty good one. And then even this little area here on Friday, if you go down to a 15-minute chart, I had put in, hey, we met entry, but there's some really close resistance just above us. Here it was right here. And we hit that really close resistance right away. So even though this one worked for just a few points, and I talked to a couple of regular listeners that were able to pick this up on a short-term scalp, it did then eventually come back down through. So a little bit always cautious on these areas. When I've got this fair price value area just before we meet the entry, it's going to make it even that much lower of a probability. So it did move out for a little bit of a one-to-one trade. Some people were able to take it. If you're following me on the Twitter feed, then you see that I had said, 15-minute entry meets the entry, but we are sitting very close to that overhead resistance, and that's exactly what happened. We hit that resistance, we continue to fall. So for short-term J traders, you're able to get that one. But now we got to take it off the list, right? A little bit later in the day, we came down to yet another level. Once again, this is that same example. We had a little bit of a fair price value area just in front of the area. So realistically, you're probably not catching this one. If you get in on this one, you probably get stopped out pretty quickly for a small loss. And that takes us to where we are now. Now, taking a look at our small time frame chart, we actually have on the futures markets on Sunday night have bounced down here, and being that it's a dashed line, that means that we expect to get long as it comes back out, which is exactly what happens, and it's continuing to run. My guess is most of you were like me and didn't open up your computer as soon as the futures markets opened and missed out on this trade. I would love to say that I caught this one, didn't. Which is why it'll probably be, the lowest point the market ever reaches. I'm just kidding. But if you did happen to catch this one and you're going to go to sleep, I would right now move your stop up to break even. Frankly, that's just what I believe. We've got this tumultuous of a market. I'd move your stop up to break even, and I would be looking at some profit taking right in through here. This is my fair price value area that's just above the move into the zone, so you may want to look to take some profits fairly quickly. Maybe not all of it, but at the very least, I'd move that stop up to break even if you're taking a long in this situation. But let's talk about this from a bigger picture perspective, and we got to look at it from a now. By the way, can't use that level again since we've already used it once. Going back to our hourly chart, where's our next area? Right? Where's our next buying area? Isn't until 2,700. That's really the next buying area that we have outlined is 2,700. So there's a chance we could fall another 44 points just based on that number alone. Now, I've said this, I don't know if I've said it once, I've said it 1,000 times, right? Don't spit into the wind, don't tug on Superman's cape, and don't short the all-time high. We are 130-something points off of the all-time high. When you're 130-something points off the all-time high, I'm okay if you want to take a few shorts, if you want to throw a few shorts out there. So looking at the 15-minute chart, I actually like, for a decent short opportunity, the area right through here, right around 2,800 as the better opportunity. And why do I like that? Well, simply because it was a little bit of a resistance point right through here. Excuse me, a little bit of a support point right through here. We rallied, dropped through it, came back up to it. I think this could still serve as a reversal point in the future for a potential short. Now, once again, we're on the 15-minute time period. So anytime I'm on the 15-minute chart, I change the color because a purple line means that it's slightly less probability. So that's really what I look at from a trading perspective, right? We've got the long that we entered down in here. For some of you may have entered it, and I think that this is a good short opportunity. I don't want to play around with any of this stuff here in the middle of the move. I think when you play around in the middle, you wind up getting hurt. A very good friend of mine, Michelle, says don't diddle in the middle, and I don't want to play around in the middle of a move. So it just doesn't make any sense for me. I will, however, look at a bigger picture. And I want to look at the bigger picture for a minute. Now, I'm going to move off the ES and move to the SPX so that I don't mess with the lines that I have. But looking here at the actual SPX, the S&P 500, I'm going to look at a weekly chart. And the reason I wanted to pull to the weekly chart is right now, many people are getting nervous, very nervous, because we had our worst week in Wall Street in over, I think it's in over 2 years, right? Maybe our worst day in over 2 years, maybe our worst week since '08 or something like that. We had a bad week. There's no getting around it. The last time that we had a week of this magnitude was, just look at the size of the candlesticks, right? We had one through here. We had one through here. And notice, though, both of those weeks, they were fairly long, drawn out, pretty strong down moves. And as we go further back, you'll see a few pretty big weeks in the midst of this big upward trend, right? The upward trend hasn't ended. There's no reason for the upward trend to end. And I would go so far as to say that we've gone up really far, really fast. I don't believe that it's inconceivable that we pull back to this region here. I don't know that we're going to get below this region here, but I don't think that it's inconceivable that we pull back to this area here. This is our fair price value area on a weekly chart. So for those of you that are a little bit concerned about the market continuing to fall, in your longer term investment style accounts, if you want to go to cash and wait for a little while, great, no problem. I could understand why you would want to do that, but I don't believe that we're going to fall below this region here. And if we do, there's another area just below it here. That's really when I would start to look at changing my bias, right? My bias right now is still going to be of the long side. Now, I will tell you, and many of you have heard me talk about this in the past, I'm a big believer that I don't want to get out of the market. I want to let my profits continue to run as long as I can. But in order to do that, I move my stop up to below the latest fair price value area. So right now, my protective stop is right in this range here. This little pullback, it could be the best thing ever, because if I get a little pullback here that simply... let's just say theoretically that we do pull back to this area. Make this red. Let's say that we theoretically get a pullback into this area before then rallying higher. Well, that would be the best thing for me, because that would allow me to take my stop loss and move it up. And in reality, that's what I want to do for my longer term positions. I want to continue to have a reason to move my stops. And it gets scary when the market goes up super fast, because it gets pretty far away from where your stop loss is. It gets pretty far away from where your protection point is. I've got some fair price areas marked off where, there's a strong sentiment that says that we're going to continue to rally up into this 3,400 range. And that's really when you'll start to see the weakness come in. But until then, there's no reason for me to change my overall still bullish bias. Okay, so I know that's a lot of time that I spent on one market, so I'm not going to spend that much time on every other market, but I did want to make sure that I dive into that pretty good. So the Nasdaq, I didn't have any levels marked off. We had talked about a potential area in through here if you thought that there might be a bit of a reversal off of here, but I didn't feel as strongly about that. So the Nasdaq has gone through every area, but none of those were buying areas for us. Nothing was set up for a potential long until this area down here, and this is really where our area is, 66.31 off that hourly chart. Crude oil, so let's talk crude for a few minutes. So in crude, we had a potential short setup right here. This one also hit the crude area, started to move down, gave you a little bit of movement, started to go your way, and then popped back up. So once again, this is why it's important to follow the Twitter feed. On the Twitter feed, we talked about moving that stop to break even and taking your money off the table. And if you follow us, if you follow me on Twitter, that's really going to help you a lot. It's just at Chuck Fulkerson. Find me on Twitter. It's pretty easy to do. I talk about where to move those stops and how to protect and how to do those different things. So we still have an area down here in crude that is a buying opportunity. One thing I was talking to a friend of mine about is, even though crude has shown a fair amount of strength and resiliency, we've not really seen the oil stocks following through with the same strength. And I think that partially could be because we're getting a little bit of momentum slowing in crude oil. I've talked about the slowing of momentum on the daily chart for a while, and now we're starting to see it come to fruition. So I actually, though I still have this level down here set up on the hourly, I'm not as in tune with it as I was before. I want to be very close. I want to be very closely in tune to how it comes back into the area, to the point that I'm actually going to change this to a dashed line, just simply because the bigger picture time period momentum weakening scares me a bit on this area. Now, bonds continue to fall. Bonds have continued to fall over and over. And yields may go up, but prices may go down. And so as those bonds continue to fall, we really have to start looking back to find any really strong potential buys. And so we got to come all the way back to this range. I'm actually going to come down to here. Now, mind you, we're on a weekly time period here. So this is a much, much longer time period. But I believe that bonds can fall all the way down to this area. So with that in mind, I'm going to be looking at shorts as price rallies up. The problem I've had is being able to get into some of these darn shorts as it doesn't come back up to our fair price areas where we believe to be some resistance. You've got to take the breakouts, and the breakouts have presented themselves. So as a breakout sets up, we'll take a look at it and see if we can find a decent breakout for these bond notes. The Aussie, so the Aussie tonight has gapped down into our buying area, and it's rallying up from there. So if you're in this Aussie trade, ziggy zoggy, oi, oi, oi. If you're in the Aussie trade, take it, move your stop up to break even. I'm of the ilk right now. Any longs that you have, move your stop to break even. Just make sure that it's in play. And I would look up here at our profit target, and even up here as a potential re-entry for a chance to get short. For sure as a potential short re-entry. The euro, nowhere near our entry on the euro, and I like the Aussie as a much better alternative to the euro. Canadian, so our Canadian dollar trade was also running, but once again, we put in the Twitter feed that we were coming near our overhead resistance, which we were. We hit the entry on the small time period, came up, here's our overhead resistance, touched that for a profit target, and then skadoosh, came right back down out of it. So that one worked out for a little profit as long as you were there to manage that thing. And now we don't have anything until down here, and I'd be much more apt again on this one, like I would on the Aussie, to look at a potential short right up in this area here. It's not actually the cleanest. You're actually cleaner if we go up to here. This is a more clean, a more clean area, if you will. But both are still pretty valid. Last but certainly not least, looking at the Great British Pound and the Japanese Yen. So Japanese Yen trade, this one did not meet entry if you followed the rules. Now notice, this is a dashed line. So a dashed line means we need price to come into the area, and then we need it to come out of the area before we get long. Well, it came into the area and then fell right through. Once it falls right through, you follow the rules, you're out, right? I need it to trade into the area. And typically I want to see that trade in at least 33%, right? At least 33% of the way into the area. 50% is even better before I'm going to get in, because that's truly confirming that it has changed direction before I would get in on that thing. So as far as looking forward in the future, there's really nothing on this chart that excites me, and I mean that. There's nothing on here that screams, "Hey, you gotta hit this thing." So I'm gonna let that one be. The Great British Pound, much the same way. Although in the pound, let me remove this. I do like this up here for a potential short. It's a great setup. But it's all going to depend on the arrival, and I just frankly don't know if we're going to get there or not. So with that being said, I'm going to turn this thing over for the week. Those of you from tradersarmy.com, thank you so much for joining us. Those of you that watch my daily video, I'll have actually a little bit more information about Traders Army probably in the next coming couple of weeks. Some cool things coming on that site that I'm going to kind of work with them a little bit about some different ways to offer up a little bit of mentoring, a little bit of live trading rooms. A number of you have reached out and asked me about that, so I'll have some more details on that hopefully soon. Waiting on the programmers to finish a couple things on their side. But until next week, remember, fiercely protect your capital. I will see you all soon. Fly, Eagles, fly! Sorry, Boston fans, I gotta do it. See ya.